Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those crazy corporate filings. Today we are diving into National Healthcare Corporation's proxy statement. It's not exactly a thriller, but stick with me because we are about to uncover what's really going on with this nursing home company, and it's probably not what they want you to see at first glance. First off, this is basically a formal invitation to their annual meeting in May of 2025, a yearly gathering where shareholders get to vote on important stuff. The main things to vote on this year are which people get to be on the board of directors and if shareholders agree with how much the company is paying its top executives. It's like a popularity contest, but with real money and power at stake. So who's up for re-election? We have Stephen Flatt, Richard LaRoche and Sandra Trail. These folks want to keep their seats on the board for another 3 years. Also, there's a vote on executive pay called a say-on pay vote. This is where shareholders get to give a thumbs up or thumbs down to how much the top dogs are making. It is not a binding vote, so executives can ignore it, but companies usually at least pretend to care what shareholders think. Now, before we get too deep, let's check out who actually owns this company. It seems like the big players are BlackRock and the Vanguard Group, owning a big chunk of the shares. It's always good to know who the major shareholders are because they can have a lot of influence on what the company does. Moving on to the people in charge. We have got a 7-person board of directors. It looks like there was a bit of a shuffle recently with some retirements and appointments. One director, W. Andrew Adams, is set to retire after the annual meeting. Stephen Flatt is the CEO, so he is an inside director, meaning he is an employee of the company. The rest are independent directors, which means they are not employees and supposedly provide unbiased oversight. The board has committees for important stuff like auditing the financials, deciding on executive pay, and nominating people for the board. These committees are supposed to make sure everything is being done fairly and in the best interest of the shareholders. Jumping to a section about sustainability. It is like every company now wants to show how much they care about the environment and people. NHC talks about things like employee safety, community investment, and reducing their environmental impact. Here is an interesting section about hedging. Basically, the big guys are not allowed to use fancy financial tricks to protect themselves from losing money on the company's stock. It is to ensure they are actually invested in the company doing well, not just in protecting their own wallets. The company has a policy to prevent illegal insider trading, where people use secret information to make a quick buck. Everyone is supposed to play fair. The company can claw back pay from executives if they mess up. This is the clawback policy. If the company needs to restate financial results because of executive wrongdoing, the company can take back some of that pay. Moving on to the committee reports. These are basically updates from each committee about what they have been up to. The nominating committee helps find qualified people to be on the board. The audit committee makes sure the financials are accurate, and the compensation committee decides how much the executives get paid. Let's dig into that executive pay a little more in the compensation discussion and analysis. NHC claims it tries to pay its employees fairly, offering opportunities to earn total compensation that's equal to or higher than similar roles at other companies. The actual salaries for the top execs are CEO Stephen Flatt, making around $560,000, CFO Brian Kidd, making about $281,000. Huan Michael Ussery making around $515,000. They also have a chance to earn bonuses. The company uses a bonus plan that has been around for a while. The bonus pool for last year was about $5.3 million. So how did the bonus money get split up? CEO Flatt got over $1 million, with the COO Ussery getting about $976,000 and the CFO Kidd around $518,000. Part of these bonuses are paid in restricted stock, which basically means they cannot sell it right away, so they are tied to the company's future performance. Looks like the bonus plan is staying pretty much the same this year. 5% of pre-tax earnings goes into the pool, and bonuses are paid partly in cash and partly in restricted stock. Apart from the bonuses, the executives also get stock options. It is like giving them a chance to buy the company's stock at a set price in the future. If the stock goes up, they can make a profit. If it goes down, they are out of luck. The company offers a 401k plan for retirement savings. Executives can also participate in a deferred compensation plan. This lets them put off paying taxes on some of their income until later, usually when they retire. Okay, let's take a closer look at those numbers in the summary compensation table. CEO Flatt's total compensation for 2024 was around $2.15 million. That includes salary, stock awards, option awards, and bonuses. Looking back, his compensation has been a bit up and down over the last few years. There's a new section that compares how the executives are getting paid with how the company is performing. It is showing that over the last few years, the company's net income, CEO compensation, and stock performance have all been jumping around. While the CEO's compensation increased last year, it is hard to tell if it was correlated with the company's performance, as the peer group's TSR value grew more compared to NHC's. This table details the specific stock and option awards granted to the executives during the year. It lists the number of shares, exercise prices, and the estimated value of these awards. This section lists all the stock options and stock awards that the executives have but haven't exercised or vested yet. It gives you an idea of how much potential profit they could make if the company does well. This table tells us who cashed in on their stock options and awards during the year and how much money they made doing so. It looks like all the named executive officers exercised options for value realized between 2,000K to 50K. This is a look at the non-qualified deferred compensation, which is that retirement savings plan we talked about. It shows how much the executives contributed and the company matched in case they meet requirements such as vesting periods. The government requires companies to disclose the ratio of CEO pay to the median employee's pay. The CEO made 61 times what the median employee made. This is pretty standard for a company of this size, though the range is quite broad. Let's shift to how much the directors are getting paid. They get cash compensation for attending meetings, with extra for chairing committees. They also get stock options. The directors also got a discretionary bonus of $120,000 to $85,000 to encourage them to invest in the company's stock. This table summarizes the total compensation for each of the directors, including cash fees, stock awards, and those discretionary bonuses. Alright, back to the voting matters. Proposal I is about electing those directors we mentioned earlier. The board recommends voting for all of them. Proposal 2 is the say on pay vote, again giving shareholders a chance to say whether they approve of the executive pay packages. The board is obviously recommending that you vote for it. Here the company admits there were some late filings of reports about stock ownership by some officers and directors. It happens, but it is worth noting. This table shows how much stock the directors and executives own. It is always a good sign when the people in charge have a significant stake in the company. It means their interests are aligned with the shareholders. Now, let's talk about related transactions. These are deals the company has with people who are connected to it in some way and can hint at conflict of interest in some cases. NHC employs some family members of directors and executives, such as administrators. NHC has a long-standing relationship with National Health Investors, a real estate company that owns many of the nursing homes that NHC operates. NHC leases a bunch of properties from them, paying rent. It's a pretty big deal for both companies. NHC also has a relationship with National Health Corporation, an affiliate that provides administrative services. This entity is owned by the Employee Stock Ownership Plan. The company claims to have policies in place to review these related party transactions to make sure everything is on the level. The audit committee is supposed to look at them and decide if they are in the company's best interest. Here we have the procedures for shareholders to communicate with the company and the board using a tool called NHC Values Line. If you've got something you want to propose at next year's annual meeting, you need to get your proposal in by November. The company maintains a website where you can find a lot of information like their code of ethics and other important documents. Now let's take a step back and think about what all of this means. NHC is a company in a tough industry facing challenges like rising costs and changing regulations. While they are talking about sustainability and community involvement, it really comes down to the financials, and their success depends on keeping costs down and providing good care to their patients. The executive pay seems pretty rich, but they have tied it to the company's performance, which is a good sign. The relationships with related parties like NI and National Health Corporation create potential conflicts of interest. However, the audit committee is supposed to be watching out for that. Overall, NHC seems to be doing okay, but it is important to keep an eye on those relationships. The executive pay seems pretty rich, but they have tied it to the company's performance, which is a good sign. The relationships with related parties like NI and National Health Corporation create potential conflicts of interest. However, the audit committee is supposed to be watching out for that. Overall, NHC seems to be doing okay, but thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.